future. We're talking real money.
Money drives us to do crazy things. It really does. And one of the things that we do more than we should, and we all know it's a problem, is gambling. At one point in time or another, we've gambled on something. In Tom's case, it's $100 on one spin of the slot machine wheel at Vegas. Okay, unknowingly or unwittingly, but still, it was a one-time
mistake,
$100
man. I'm
bet.
going to live with that the rest of my life. Come on.
Yes, you are. You are. Well, the rest of my life. Yours will probably be longer than mine because you're in better shape.
Well, and I'm not going to bring it up again. You're going to keep bringing it up.
Exactly.
So.
You'll never bring it up again. If you had your way, that would never come back up. I, on the other hand, am a sadist. Just a verbal sadist. I'm a talk show sadist.
That's good.
But we know it's not good for us, right? We know that gambling is a losing proposition. It must be. It cannot be anything but a losing proposition. You cannot have more winners than losers when you're dealing with a true zero-sum game. And that means that for every winner dollar, there's got to be a loser dollar minus the house's take.
The old house stepping in there, kicking a little bit for them, huh? Sure.
The only one who consistently, except for one guy who owned a casino in Atlantic City, makes money on gambling are the casinos, or the croupiers, or the bookies, are the middle people. And gambling pertains to stocks. We're going to get to that in a minute. But in the past few years in this country, gambling has grown into this massive business empire, headed up by not just your big casino companies like the MGM or the Seminole Indian tribe in Florida. It's DraftKings and it's FanDuel, and they're not just gambling on sports anymore. They've discovered that other kinds of gambling are possibly even more lucrative and a whole lot less complicated. And it's not just your prototypical gambler either. You know, we have this stereotypical vision of a gambler, sort of a, low life, not the brightest guys, little mobster kind of guys, or some guy from Jersey hanging out at the OTB or the track, or, the old lady smoking a cigarette at the casino, pulling the handle on the slot machines and just smoking and losing her voice. But no, there was a story in the Wall Street Journal recently, and that brave woman to do this.
Huge.
To tell her story. A woman by the name of Kavita Fisher. Kavita is she's a suburban mom.
She has PhD.
MD.
Pardon me. I forgot that part too.
She is Dr. Fisher, psychiatrist.
Yeah.
Not just a doctor. Wait, a doctor of the mind. She knows what compulsive gambling is, what a gambling addiction is. And yet, Kavita gambled hundreds of thousands of dollars online, losing over $500,000. And yet she wanted to stop over and over and over again.
She even asked the state in which she lives, which I think is Pennsylvania. Said, cut me off.
Cut me off.
Ban me. Don't let me do this anymore.
Give me a lifetime ban.
And the thing is,
I can't stop myself.
It's fascinating that she's up, and according to the Wall Street Journal, I think this is right, she's up against an industry, quote, skilled in the art of leveraging data analytics and human behavior to keep customers. In other words, they know how to do this to keep you coming back. We'll get to the stock.
They're using you against you. They're using you against you. And what I find fascinating is they actually have people who work for them whose job it is to keep you gambling and make you gamble even more. They're like your own personal destroy my life concierge.
Keep it coming. You would lose a bit, and then that person you just described from I think it was DraftKings or one of those.
Well, but they all do it.
Reach out and say, "Oh, sorry you had a bad day, but here's the thing: we've got a $500 gift we're going to give you, just to make you feel better, get you back in there, get you back in the game."
Say we give you a few bucks to get. Yeah, we'll front you some money. We'll go ahead and just front you that money. They front you the money.
I know, and then you start betting again, and in her case, big bets. I mean, she was really, really rolling here with some major. And here's the thing: for her, she'll fix it. I mean, she's paying off. She has an income.
Yeah.
She's paying off $2,400 a month for 15 years to pay off her debt. I mean, that's substantial, right? That's 30 grand a year for 15 years. Yeah, she had to go do that to pay it off. And the other thing I found fascinating from this piece was 1/2% of the people are gambling are supplying 70% of the profits for these folks, for DraftKings and others. They get you in, they roll you up, they give you a concierge to keep you gambling, and then they take in. And again, I think you may have mentioned this number, you may not have. The fact that this has gotten so big, the Super Bowl had $23 billion riding on it. $23 billion with a B.
And that's just one game in one sport. Now they do all the sports, and now they do regular casino games.
Yeah.
You can play slots online without ever getting up from your Barca lounger.
And here's the thing
Does
that's
anyone
fascinating.
actually have a Barca lounger anymore?
Here's a fascinating thing.
Grandpa still has the Barca lounger.
I just went through this up close and personal. You mentioned the slot machines, but I went in the sports book when I was down there.
Yeah, not
and you walk in the
kind
door.
Of bet she makes.
No, but here's the thing: you walk in the door, and what do? They tell you, "Oh, well, to get started, you need to get the app. You need to get this on your phone," which is what you do.
They know now that all the data is through the apps, not from the floor.
Indeed. So you get the app, and I made a couple of very small bets, one of which was a winner, one of which was a loser. But they start texting you, "Hey, don't forget this. Oh, this game's coming up. You got to." I mean, it reminds me, and I hate to say it, but it reminds me of Robinhood. The excitement of you've got to go do this. This is bing, bang, boom. They get the dopamine going, right? And you're all worked up about this, and they keep you in the game, paying attention.
Yeah, I mean, and it's part of it is the way they entice you. It really is. It just fascinated me. One anecdote from this article. Just a year ago, Dr. Fisher emailed the person at DraftKings that was her host. She had her own personal concierge at DraftKings.
That's right.
And she said, I'm doing terribly and I'm losing a lot of money. And she goes, I need to either gamble on a different game or quit gambling completely. Oh, she said the magic word. In the meantime, is there any way you can send me some VIP love?
And guess what?
He put $500 in her account saying, I hope you get hot.
Yeah, I hope it works. And
this is so manipulative.
It is.
I'm sorry. I get very emotional about this stuff, but to me, this is the epitome of evil. When you manipulate people, if this wasn't a legal business, this would be illegal. This would be
it's still only legal in 30 states. So there's 20 where they have not legalized this.
Well, Florida just recently legalized it, but for only, get this, do you think there's any political part in this? But only for one group, and that's the Seminole Indian tribe.
So
who
you
runs
have to
the Hard Rock casinos. You have to go through.
To the casino, yeah.
No, you can do it online, but only, not with DraftKings.
Only through them.
Only through the Seminole tribe, which is in Florida, which is a major political player in Florida.
No kidding. Couple bucks there to your campaign, get you right over the top. Okay, but just to finish that, because I mentioned the 30 states, I mentioned that this is 24/7. I mean, you can gamble anytime. That was the other part of having that app, which, by the way, I've now deleted. You'd be proud to know from my phone. It's no longer on there. I got my one payout, took the money and said, thank you. Do you want to roll to the next one? No, I'm good. I'll just take my money back and live with it. So, I mean, this is more and more prevalent, easier and easier to do, a push of a button that's attached to your credit card. And many people say, Don, you've heard them, investing is like gambling. They will say that, right?
Right.
Get it all the time.
Only because they're misdefining investing, in my opinion.
Yeah, well, because proper investing, the odds are in your favor. We know with gambling, the odds are completely against you. You mentioned the house, you mentioned the zero-sum game. I mean, the odds are way against you there, but if you invest in a diversified portfolio, if you keep your costs low and you don't trade in and out, then over time you've made money. Can't say that about any gamblers I know. And
no, I can't say that about any gamblers I know. And the funny thing is, back in 2006, 2007, I had a friend, not a good friend, but a friend here in town who quit his job, sold his company, and stayed at home full-time day trading. And he day traded himself to several $1 million.
And?
Lost every bit in the crash.
Oh, 08, 09?
Mm-hmm.
Wow.
Had a couple of good years, but the problem is any kind of betting will eventually bite you in the butt. That is a lot of B words.
But let's talk about what is gambling when it comes to investing. I think individual stocks is gambling.
Absolutely.
Because you could win big, could be NVIDIA, but it could also be, I don't know, what's falling apart.
23andMe.
23andMe, right. That's on the pink sheets now or something, right?
Yeah.
That can happen. The other one is leverage. Leverage cuts both ways. Leverage can make you feel really good when it works. And guess what? When it goes the wrong way, it can be very painful. And by the way, we're not just talking about leverage when buying stocks, margin. No. Yeah.
We're also talking about leverage when buying the everyone's perfect investment online, on podcasts, real estate.
Because that is leverage.
You think that leverage is good for you, but you forget or you ignore the fact that, again, I'm going to go back to 2008. Friend in town, a former retired Army general. Wow. Very bright man. His wife, both he and his wife were in the real estate business. They were brokers. They owned a real estate firm. They were very intelligent people.
They were the house.
Very successful. And they believed in the 2005, 2006, 2007 craziness as real estate. And by 2007, it was going nuts. They bought not property, but dozens of properties, and all the down payments. Because remember, this was the days of liar loans. The down payments all came from borrowed money.
Oh, God.
They were borrowing against another property. And because as the value of the property, they had a piece of property, it went up, they'd take out a second on that and use that money to buy another property.
Is that
when
nuts
2008 happened,
and guess what?
Everything.
Well, Florida was ground zero for a lot of this, right? Everything. A lot of people that's shocking. I hope his pension's working out okay.
They don't take that away.
No, they can't touch that, I don't think. So, I mean, but what are the takeaways here in terms of the investing side? Yes, it is gambling to buy individual stocks. Yes, it is gambling to time markets or to say, here's what's going to happen, because nobody knows what's going to happen. I mean, this year, I think it's going to be the classic case where everybody said interest rates have to go down. And then we wait a good portion of the year and they haven't gone down yet. So Still waiting on that. I think it's also gambling to buy securities that use any of these strategies in them. We see it all the time with leverage, right? We see it all the time with
leverage options.
Yeah. And we see it all the time with even exchange traded funds where people are trying to be smart and can tell you, here's what the future looks. That's gambling. There's no doubt about it. And there's no reason to do it that we know of, and nobody who has done it successfully over the long haul. So this is great that you raised this point, because I think people should be more aware of this. Remember, gambling there was states, because Washington State has gambling, state sponsored, which I never was a fan of. And then you had to go somewhere to gamble. But now, as you point out, You can be basically anywhere on your phone and you can be going nuts. You should be aware of that. That's a risk. Truly.
It's not just a risk. I mean, this kind of stuff. It's life destroying, not life affirming. It's life destroying. Whereas real investing with a plan, with a purpose, with true academic research. I mean, think about it. Name one academic study that says gambling is successful. That it is a successful strategy. Not one.
Well, it is for the operators because I was just down there and saw the buildings.
For the players.
Yeah,
for the players.
Yeah.
Not the players. Matter of fact, by the way, the UK has now banned the VIP services on online betting.
It just keeps you going. I mean,
it's a tiny little first step, but
it's the same as when I did the interview on television with the payday loan person, and I asked them specifically, how many repeat customers do you have? Oh, we don't keep track of that statistic.
Sure they
And you
do.
know that was a lot of baloney because once they get you in, unlike gambling, you ain't getting out, friend.
Well, with them, you can't get out.
Because
at
you're
least
paying,
with gambling, you can finally bother the state enough, which Dr. Fisher had to do. She bothered the state. She had to go to their website
many times.
Like 4 times.
It was.
Finally, she had to call them, and they banned her at her request.
Please.
For life from gambling.
By the way, do they do that for weight loss? Because I'm still trying to lose. I mean, can I go to the state and tell them, just don't let me eat this? Tell them no. When I go there to the drive-through, tell them, nope, we can't serve you.
Because the pharmaceutical firms want you to get Wegovy or Zepbound or whatever it is. They want you to. Yeah. Right. So, get that $1,000 a month drug.
That's not funny, but okay. We got time for a couple questions.
Questions, of course.
Questions. We have so many questions. You're going to have to take up some. I don't know. We're not going to get through them all, but we'll do a couple today. But we've gotten a lot lately, which is great. Keep them coming. This comes from Peter in Belchertown, Massachusetts. They drink a lot of beer before they go out or something. I'm sorry. I'm sorry. That was too easy.
It's a big beer drinking place.
Yeah. I'm not gonna make a sound
breweries
like
on every corner.
All right, let's leave it at that.
All right,
not sorry. We take your question very seriously, Peter. We do. He says,
not the name of your town. Sorry.
What do you think about Schwab themes? They're supposed to be a no-cost alternative to exchange traded funds. Now, I've heard the ads for these. I heard one on Clark Howard. I heard one somewhere else. Schwab theme investing, no-cost alternative to ETFs.
Yeah, listen to this. Thematic investing. Invest in ideas you believe in. Well, what do you know? I mean, seriously. You want to invest. You love dogs. One of their things, pet passion. You love dogs. Invest in pet stocks. Is this gambling or is this investing? Ooh, it's kind of thematic, isn't it? It seems more like gambling. Seems a lot like trying to predict the future. There are 40 themes, and the themes range from, this is just ridiculous, 3D printing. How many stocks can be in three? Oh yeah, AI.
Be there.
Get this one, though. Active lifestyle stocks.
I'm trying to think that through. Is that leisure wear or something, or what? Tennis
autonomous
shoes?
Driving stocks.
Tesla?
Caffeinated drink stocks.
Starbucks?
I am serious. Caffeinated drink stocks.
Trying to think who else would be in there, but I guess Dunkin' Donuts, I guess.
Let's see. What do we got? I'm going to skip. Oh, China Internet.
I forget the name of that company. There's one big one.
Alibaba?
Yeah.
Yeah, I thought that.
Thank you.
Let's see. I just love these, though. Discount. And these don't even go together. Discount and luxury lifestyles.
Wait, discount and luxury?
And luxury. That's right.
And everybody in between?
Yeah. This is a hedging strategy.
You're gonna, it's not looking good for luxury, we overweight discount, right?
Yeah, they address customers at the two ends of the wealth spectrum. So it's a hedge. Luxury goods could do well 1 year. Discount good could do well in a recession. We go back and forth. This is this is not silly. This is beyond silly. There's an online music and video theme.
Okay, but
Come
is it really
on.
zero cost?
Whoa.
He said no cost alternative to exchange traded funds. So why would Charles Schwab offer this at no cost? That doesn't make
because
sense.
they're getting paid for trading the stocks, probably. But let me see. So no fees and zero online trading commissions. Oh, but you got no fees to access and zero online trading commissions. And then that may very well be just to get you in. It probably is to suck you in.
Get your money.
I'm guessing, and it also could be to get people to open a Schwab account.
Sure.
Because you'll do other things. I do not know, but yes, you'll pay a zero commission, and there is no fee.
I'm going to go with the luxury thing. Put a side of AI in there, and maybe the self-driving car. Okay.
All right.
Take care of that for me.
I'm going for the junk food category because you're going to keep that one going single-handedly.
You got to keep on going.
Yeah, keep on going. What else you got?
Well, okay. So, but just to close the thought, no, this is not a strategy.
Idea.
This is not. This is a pitch. It's a come on, and it's sector investing, if for no other word.
And by the way, this just proves our theory that the investment industry will do anything they can come up with that they think will make them a buck somehow.
Yeah, exactly. That's exactly what this is. All right. This comes from Chris. Now you got to listen carefully. From Grand Terrace, California. It says, I'm confused. I'm socking away 12% of my pay into a pre-tax IRA, but I have the option to do a Roth IRA. Right now, the pre-tax keeps my taxes in the lower tax bracket. But if I choose Roth, how would that affect my W-2 at the end of the year? I also have a personal Roth I pay through Schwab and an existing 401k through Morgan Stanley, plus savings in an account making 5%. Thanks for what you do. I listen almost every day at work. And this is a nice comment. Money smart by osmosis.
Yeah, you just suck it in.
I
just got so money.
Can I learn German that way or something? I'd like that.
Okay. Yeah, they say that you could just play it subliminal. You play it in bed. Anyway, okay. This is one of those questions where you go, I don't know, it depends on the future. But if you're in a high bracket today and you expect to be in a lower bracket in the future, but you do not know, you can't know, then that pre-tax contribution makes a lot of sense. As you said, it keeps you down a bracket. Well, that being down a bracket is money on which you can now make money for many, many years to come that you wouldn't have had otherwise.
Touché.
This is why I think what you're doing is smart. You've got the pre-tax and you're doing the Roth, covering the bases. Yeah,
I like the spread here. I think having money in many buckets is, I hate to use that expression.
I do too.
Many holdings. I mean, pre-tax, post-tax like Roth, and then brokerage. Because when it comes to draw the money out, now you got different places to do it at different tax brackets. Very important to consider for your retirement. So I wouldn't change anything. I don't know what the confusion is. It's not going to affect your W-2 income at the end of the year.
Yeah, well,
if you choose Roth, because then you're going to have more income.
Because you're going to have more income, you're going to pay more taxes.
Fair enough. Yeah.
So that's money that is now gone forever. Now, eventually you will give the government that money, but the way the IRA, the post-tax IRA works, or the pre-tax IRA works, I should say, the way that works is that money you would not have otherwise had.
True.
Is now earning you money. So if you're younger and in a high bracket, you're a big earner and you're young, that's a lot of money that can grow that you wouldn't have had growing. So you can get all that growth on that. Of course, a portion of that growth goes to the government.
Okay, here's the thing. If Congress would take my suggestion, this would be much simpler. All retirement savings should be Roth. That's it. It's over. There's no... Give them their money now. They need it anyway. Apparently, they're running a big deficit from what I'm told. So give them their tax money, get it done, and then you get tax-free growth. Then it's easier at retirement. Just simplify.
Did you hear the latest expected number on debt service this year, U.S. government debt service?
I probably don't want to know this.
It's getting close to $1 trillion just debt service.
Just the service on, and that's going to get more expensive as rates are higher here.
Yeah. So. Wow. Okay. Well, do you have anything else you'd like to share?
I do not. I want to thank you all for listening to our program, which we greatly appreciate.
Wow. This may be the shortest ending to the show in the history of the podcast. Thank you all. Tell a friend, or 10 if you have them, 100 if you have that many. Good for you. You are a very outgoing person. And please send your questions in at talkingrealmoney.com or speak them in at talkingrealmoney.com, and I'll answer those on Friday's Q&A show. I'm Don. Tom's over there. We're doing that thing we do, which is, well, talking real money.
The opinions and views expressed on this podcast were current on the date recorded. Opinions, estimates, forecasts, and statements of financial market trends that are based on current market conditions constitute our judgment and are subject to change without notice, including any forward-looking estimates or statements which are based on certain expectations and assumptions. Although information and opinions given have been obtained from or based on sources believed to be reliable, no warranty or representation is made as to their correctness, completeness, or accuracy. Information presented on the podcast is not personalized investment advice from Appella Wealth. The views and strategies described may not be suitable for everyone. This podcast does not identify all the risks, direct or indirect, or other considerations which might be material to you when entering any financial transaction. Past performance does not guarantee future results, and profitable results cannot be guaranteed. We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. The podcast is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appella Wealth, a fee-only registered investment advisor. Please see Appella Wealth's ADV Part 2A on our website for information regarding Appella's fees and services. Appella Capital, LLC, DBA Appella Wealth, is an investment advisory firm registered with the Securities and Exchange Commission. The firm only transacts business in the states where it is properly registered or excluded or exempt from registration requirements. Registration with the SEC or any state securities authority does not imply a certain level of skill or training. Appella does not provide tax or legal advice, and nothing either stated or implied here should be inferred as providing such advice. Thanks for listening, and please visit TalkingRealMoney.com for more information and important disclosure related to performance of any specific index or fund quoted in this podcast. And the lawyers get richer.